Hi, welcome back to Razor's Edge. I'm Ben Elowitz. Today's episode is a conversation with David Politis. David is a multi-time entrepreneur. He was CEO of Vocalocity and Cloud Sherpas and BetterCloud. And what you're going to hear is a real learning journey. When David started, he was deathly afraid of any public speaking. And today you're going to hear tremendous energy and confidence in himself and how he's used that to raise over $300 million in venture capital and to mentor so many entrepreneurs. There's two really interesting themes in what we talk about that I think are going to be super valuable. First, the idea of investability. That's going to all ends to discover exactly what does it take to make a company worth venture funding. And number two, storytelling, which David considers the most important skill of raising capital. But storytelling isn't about using flowery language and rich metaphors. What he really means by storytelling is lining up your company with what investors want and sharing that story over time to show how you are closing all the risks on the path to success. You're going to hear all about how David learned these things over the course of his career, one step at a time, by what we call following the feedback. And that is great inspiration for all entrepreneurs. If you enjoy this, I also really encourage you to tune into David's podcast, the Not Another CEO podcast. He's had an outstanding set of discussions with top CEOs that can help you grow yourself and your company. And there'll be a link to that in the show notes. I think you're going to appreciate this conversation as much as I do. So with that, please enjoy. David, I am really pleased to get to spend time with you. I've loved getting to know you. I can't wait to dig into a lot of stories from your fundraising journey and how you work with entrepreneurs. I thought it'd be fun to start with a little bit of a lightning round. So kind of throw a bunch of questions at you.
Great. I'm excited.
If you had to describe your leadership style in one word, what would it be?
Of the people. That's not one word, but yeah.
How does that come up for you?
I was not like this in the early part of my career, but what I learned about myself is I'm really good at motivating people, building teams. You know, I've been told by people like I would run through a brick wall for you. I'd run into, burning building with you. That's something that I was really bad at early in my career, or at least I didn't know how to unlock. And then I became better at it and realized that the power of getting an amazing team, giving them ownership, and showing them why what they're doing is so important and then supporting them in doing that. I think I got very good at that over the course of my career.
If you could collaborate with any great founder, who would you most want to collaborate with?
I'll tell you that the only person that I have ever really looked up to in business, like truly looked up to in business, is Satya Nadella from Microsoft. What he did in terms of the transformation at Microsoft is something that really is amazing. I went to some event where I was in a small group of CEOs and he was speaking to us, maybe 20 CEOs. And I left there, I was like, I would follow that guy into a burning building. And at one point I emailed him, this is probably 2018 or something. I emailed him because I wanted to tell him, I look up to you, blah, blah. And also we were building in their ecosystem. And he wrote me back in like 10 minutes. It literally wrote me back, CC'd his team, was like, hey, let me know when you're out here. Definitely, from a CEO perspective, he's somebody.
Awesome. When you think about fundraising, do you love fundraising or do you dread it?
It's a necessary evil that I would prefer not to do, but I believe I got very good at. That's how I would describe it. I don't enjoy the actual process. I don't think any really good founder enjoys the process, or any good operator, let me put it that way. But I think I got very good at it and I understood how to play the game.
And when meeting investors, what's your biggest green flag?
That's a really good question. An investor who seems genuinely interested, you can tell the difference of someone going through the motions of asking questions for someone who's genuinely interested in my background, in the company, in the product, and like genuinely interested. Even if you're interviewing like a candidate, now flip it the other side and you say to someone at the end of an interview process, what questions do you have for me? And they're like, I see that you have values. Which value is important to you? Like, that's just like a generic question versus hey, I read the website, I looked at everything, and what I saw is that one of your values is, strive to delight. And I love that. Can you tell me how that actually manifests itself? That's a very different kind of, question. And you can tell when investors are really legitimately interested in you, in the story, have done some research, and especially on an investor who's met with hundreds and hundreds or is meeting with hundreds and hundreds of founders, for someone to actually do work ahead of time, for someone to even understand who they're walking into the meeting with, that to me is a really good sign.
Awesome. What's your biggest red flag when you see an investor?
Well, I mean, the biggest red flag is the investors who are not even paying attention while you're pitching. I mean, those
Yeah.
make me, nothing makes me more upset. Yeah, that's the worst, and I've had that happen to me a lot of times, and I'm pitching and the person's like now on their phone or they're, doing something. You're just like, why am I even here?
Yeah. For me, it's when they kind of jump to the answer that's already in their head based on a bunch of assumptions. And
Yeah.
I think, how are you going to figure out new businesses if you're always bringing your old assumptions with them?
Right, right. I had one where got all the way to the investment committee, went all the way to the end. Everyone was giving me thumbs up. The partner was giving me thumbs up. And at the very, very end, went to the investment committee, and it was like 8 people, 8 partners, and one partner had just had a really bad experience with someone in a very similar space and just vetoed it. It was like from 20 years prior, literally 20 years prior. And they said, there's no way we're doing this. And I've seen that happen to so many people. Like, I think it's hard for investors to really let go of all of that baggage, both, by the way, good and bad. Sometimes they'll make really bad investments because they had a good investment in the same space, and then vice versa.
Yeah, those scars from the past, they don't always know what to project from their last
Right.
scarring experience onto the new one. Sometimes they miss it because the whole memory is so toxic to them, right?
Exactly. Exactly.
Yeah. What do you think is most important for an entrepreneur to be successful in a fundraise? Is it EQ or is it IQ?
I think that in a fundraise, it's storytelling. That's what I think matters. The best fundraisers, at least the ones that I've met or come across, they're really, really, really good storytellers. Because at the end of the day, what an investor wants is a 50x return, 100x return, whatever they're looking for. And the person who can paint that story for them is the person that's gonna win. And I do think that takes IQ, of course, because I think it takes understanding the market, the product, the this, the that. But I think it takes EQ because it's about reading the investor, understanding what they're going to respond to, and being able to play that game, which I think is more of an EQ element.
That storytelling skill, is that just innate talent or do you think it can be learned?
It could definitely be learned. I was really bad at really motivating the team, and that was bad storytelling, truthfully. And I was bad at fundraising. That was bad storytelling, and that can definitely be learned. You have to work at it. It's like public speaking. I see it same similar way. Like, I was a very bad public speaker, like blacked out when I would speak because I literally was so nervous to get up on stage. And then I worked really hard at that over a long period of time, and through a bunch of reps and through a bunch of kind of getting reactions back, kind of closed loop processes and getting feedback, you get better. I actually think the fundraising is the same. In the beginning, I wasn't good, wasn't comfortable. And then as you start to be able to fundraise and you're getting 10 term sheets and you're like, oh, I am getting better at this. And you start to build some confidence. So I think there is an innate element, but I do think you can learn how to do that.
I've been interviewing a lot of CEOs, as you know, and you have as well. And the common denominator that's been 100% of the top fundraisers has been this focus on continuous improvement, like an obsession with learning from every experience to move on, getting feedback, using their own rigorous kind of assessment of what could go better. And then I think personally, the only real fundamental skill I have is a really good focus on continuous improvement. So everything else branches off of that, like anything that I got good at in all the different parts of the fundraise, all just because of relentless continuous improvement.
Exactly. I like that a lot. And there's also some element of, as you continue to grow your company, as you continue to grow, the only CEOs that are still at the companies when they're 10x the size and then another 10x the size, the only people, by definition, you have to be continuously improving. Otherwise, the company will outgrow you.
I want to get into your background a little bit. One fun way to do that is to have you imagine you're walking into a pitch meeting. Share your background and how you'd introduce yourself if you were coming to meet an investor.
Sure. Okay. Well, great to meet you, Ben. Let me tell you a little bit about myself before I get into my company. So I am originally from New York City. I grew up, my parents are both immigrants. My father from Greece, my mother from Israel. My father was an entrepreneur my whole life, came with nothing to the country. And he actually exposed me to entrepreneurship from a very young age. Starting at around 8, 9, he would take me to work with him. And I would actually end up going all over the world with him. Really, that was my dream, is to be an entrepreneur. Actually, I got to college and he was BCCing me on every email that he sent. And so I really learned that way. And I came out of school and I started at a startup tech company in Atlanta as a marketing assistant, 16-person company, 15, 16-person company. And it's a long story, but they ended up firing everyone at the company and they made me CEO. I was 22 years old. I took over this business and we pivoted. We built one of the first ever cloud PBXs running over the public internet, 2005. And we took that business to tens of millions of ARR and it was ultimately acquired by Vonage. But at that company called Vocalocity, I learned a lot about building a business. It was like basically getting an MBA on someone else's dollar because I had to hire a bunch of people. And then 2008 came, the market crashed. We lost a term sheet we had. I had to fire half the company in a day. I had to kind of rebuild the company. We lost 30% of our revenue because it was all the mortgage brokers and real estate brokers. So that was kind of that journey. It was an amazing journey. I went from there to a company called Cloud Sherpas. That was my first opportunity to see services, consulting services. We were reselling Google Workspace, Google Apps, G Suite. And so we were reselling that, helping people deploy. Very small company when I got there, million of ARR, approximately 6, 7 people. That company scaled and ultimately got to hundreds, almost 1,000 people, hundreds of millions of revenue. It was acquired by Accenture. Then I started BetterCloud, and that was really my first solo founder company. And the idea with BetterCloud was to build a better way to discover, manage, and secure SaaS applications. And we went through quite a journey and raised almost $190 million over the course of 12 years. And ultimately, the company got to about 70 million of ARR and was acquired by Vista Private Equity. And so that was kind of my journey as an operator. And then since then, over the last couple of years, I've been really spending my time advising, investing, and building community for the next set of CEOs and founders. And I have a podcast, I have a Substack, I work with about 10 companies as an advisor, invested in about 25. And so it's been an amazing journey. And actually, this is the most rewarding period of my life and career, and very excited to be here today.
Amazing. And when you share that bio, first of all, you have tremendous energy and that comes through. And even when you talk about the rough times, your positive energy carries it through.
Like I said, and I mean it really sincerely. Like if I can't describe how scared I was of public speaking, not even like to 100 people, to my 10-person company. Like I had some breakthroughs there. And one of the things was, now I will only public speak about things that I know for fact, like that I'm an expert in. That's the only things I'll talk about. If someone asks me to talk about this subject, I'm not an expert, I'll tell them no, and I'll talk about this subject instead if you want me to. And so then with those subjects, I am excited by those. I'm excited about my life story. My wife says that I'm like Chris Farley from Saturday Night Live when he says, like, I live in a van down by the river. And, he's like the motivational speaker. She's like, Dave, you really sound like him, And I'm like, yeah, kind of, I guess. So yeah, it's not really conscious, actually.
What's really neat, though, is I hear the humility about the other things, but the confidence in what you really do know comes through. Stick to what I really do know. I can be super confident and keep my energy super high. Does that carry you through? Like, does that help you?
And I think that is what drives that energy. I try to do as many speaking engagements as I can. Literally as many as I can do, I'm doing. If you see me speak, to a group of founders, I am like amped up the whole time because the journey, the lessons, the opportunities they have, I like sincerely believe it. Some of my founders I work with, I send them Rocky montage videos before they go into talks so they can get excited. I don't need that.
You don't need that. You are like a Rocky montage.
Yeah, exactly.
Let's rewind when you were raising your very first round. Like, where were you at? What did you know about fundraising before you went out to raise your very first round through Vocalocity?
Yeah. So, I really didn't know anything. Actually, that company was getting funded by its founders. Like, it wasn't bootstrapped. I mean, they were putting money into it and they were investing behind that business. And when we went to go out and fundraise, I literally knew nothing about it. And I felt this need to project, like to oversell everything and to project, yeah, okay, we're doing 4 million of ARR. and maybe the year looked like it was going to be 10, and I would tell them 12. Why did I choose 12? I'm not even sure. I just literally felt like I should sell them, how great we were doing and all this stuff.
There is this playbook that makes the rounds around manufacturing FOMO, right? Artificial.
Yeah. I think FOMO is important. There's just different ways to create FOMO. But, I had an experience. This was at BetterCloud, and I was raising a Series C, and I met with an investor who had been at Google Capital or Capital G, whatever, had been there when I was raising my Series A, and he now was on his third firm. I'll never forget this meeting. And he came in, Series C, and I'm talking to him, hey man, it's great to see you, blah, blah. I've been staying in touch with him. And he pulls up in the meeting, as I'm telling him what we're doing and where the revenue is, he pulls up Evernote, I remember like today, and he starts reading his notes from when I pitched him many years before for the Series A. And he said, when we met, you told me you were going to do this. You actually did that. When we met, you actually did that. He's like, you did 90% of what you told me. He's like, that's pretty rare. And I was like, you have the notes from then? I'm like, wow, they're capturing what I'm saying. I better be real careful with what I say. But I became really diligent on, like, if I tell an investor that I'm going to do something, I'm going to underpromise, overdeliver. So the next time they say, wow. And then if I do that again, by the third time, now they have FOMO, because how many people have pitched them have actually been able to show that track record of doing what they say they're going to do.
Yeah, and we've done a little mini program of relationship building with VCs for some entrepreneurs that I've gotten to advise, and we call it preheating the oven. And we say, like, every time you meet with them, write down beforehand the 3 things you're going to tell them are going to happen imminently in the future that you are so sure are going to happen. And they're going to write those down. And when you come back to them in your next meeting, you're going to tell them, oh yeah, not only did we meet, we exceeded. We launched that one early. Our results on this one were better than anticipated. And continually exceeding expectations.
Exactly.
It's like it sets a trajectory in the relationship, right?
And that creates FOMO. Because now you can push that last time that you tell them something, you can push that thing a little higher than you would usually do. I remember very distinctly, at one point I got cold called by an analyst at Excel, and they asked me, would I be interested in coming in to meet with them? And I said, yeah, I'm going to be in Palo Alto. I'm meeting with Google. I'll come there. So I show up at the Excel office, and I walk in, and it's this analyst with 2 partners. And I was freaking out because I thought I was meeting with the principal. And I went into that meeting and I pitched the company, and one of the partners said, Dave, I see what you're doing. I understand it. But why are you doing this just for Google and Microsoft applications when there's Slack and Zoom and this? Why wouldn't you do this for all the applications? That's a huge idea. And I said, yeah, I mean, of course, that's what I want to do. But it's like a pretty big undertaking. I'm going to need to raise a lot of money. He goes, well, that's the kind of thing we underwrite. Like, I'm not underwriting this. I'm underwriting that vision. Why didn't you pitch us that? I can remember moments like that where I was like, yeah, okay, I guess I'm not selling enough, And even though I had the ideas, I was scared to say it because I felt like, shouldn't I only tell you what I know I'm going to do now? The pendulum swung back, and I'm like, well, I don't want to oversell. I'm kind of underselling. It's a matter of like calibrating. So anyway, I learned just through a lot of reps.
How much of that was learning to think like the investors you were pitching, to understand how they think, let's say?
That definitely helped. I'm not sure that I appreciated the power law dynamic the way it really is in VC. I don't think I really understood until much later that one of my early investors said to me, Dave, we have, out of our dozens of portfolio companies in this fund, we have you and one other company that are going to return the fund multiple times over. And everything else is probably going to be get our money back or zero. And I said, what? Out of dozens of companies? Dozens? That's going to be the only 2. And I met all these other companies. They were really cool companies, really good founders. And when you start to actually understand those dynamics, that's when the storytelling does really change, because you realize that even if the company was doing 100 million of ARR, not really that important. You know, one guy, we got to 20 million. I was like, yeah, you remember I told you we're going to get to 20 million? I was so excited. And he said, 20 million? Who cares about 20 million? He's like, I want to see hundreds of millions. You know, like, and so yes, I think once I understood that, but I probably understood that too late in my journey.
We call them the fund makers, and sometimes they're the only companies that matter to a VC because the rest is noise to them, right?
Right.
It depends on the fund. But telling that kind of fund maker story, it kind of seems like it's essential for a big venture round these days, right?
Oh, I mean, I think if you don't tell that story, I don't think anyone's investing.
Yeah.
But I will say, and the way I did it towards the end and got good at this, and this is what I recommend to founders is, tell me about the product today. Tell me about the business today. Show me that you're an operator today and you understand the metrics and you understand the minutia of how you generate leads. Make sure you're showing me that, but then bridge that for me to the fund maker story. Because now I can hear and go, wow, Ben is good. Like Ben can run this business and he's constantly evolving and learning, and he's actually really open with their challenges. Like he gets it, but he has this huge vision. He's swinging for the fences, and he actually sees the steps. Will you actually take those steps? Will you actually be the fund maker? Most of the time, just statistically, you're not. But if you can show that story and that journey, but tie it to where you are today, I think investors like that.
How did you learn to get good at that?
Again, I think it was just a lot of reps. By the way, not just storytelling to investors, storytelling to the company, storytelling to customers. I tried to study, like the really good decks that I would see, I would talk to other founders. Again, I remember these distinct moments where someone showed me this deck and it was customer name, it was land ACV, current ACV, and wall-to-wall ACV, essentially. And he had this slide, and it was the top 10 accounts or 12 accounts, and then it was all the rest of the accounts. And essentially, this slide was, look, we landed these accounts, it was $1 million of ARR. Today, the same accounts are $3 million of ARR. If we get wall-to-wall in all the accounts, it's $800 million of ARR, whatever crazy story. And I'm not going to get to 800, but will I go from 3 to 20 on this existing customer base without adding another new logo? I'm giving that example because I remember that distinctly, and then that became part of my story, and I had the data to back it up, And then I saw someone's slide that was the current to fund maker, and I remember seeing that slide, and it was such a good slide of just like, we're here, but this is going to allow us to get to here, and then this constant expansion. I'm like, okay, I see that. So I think a lot of it was just talking to other founders, seeing slides, investors sending me other people's decks. I had one investor who looked at our data and said, Dave, why are you presenting the entire customer base to the VC that we're pitching? Why don't you just take your top performing segment, the ICP segment, and show those metrics? Yeah. And don't lie. Tell them it's just the ICP. Give them the full customer base. And I was like, obviously. And then you do that, and you're like, holy shit, my core customer base is 142% NRR and is growing 80% a year, and ASP is 50% higher, and the reality was that was the future of the company, and the churn that we had was with the customers from 6 years prior, and that was the data. But I didn't present it that way. Back to the storytelling, you start to understand how to take the pieces of the business and present it to an investor, so when they see it, you're showing them what you want them to see, not just everything raw.
This is a big deal because a lot of people focus on showing discontinuity when you're pitching. I'm showing how different things are going to be. But one of the things that's interesting about what you're talking about is you're showing, hey, all you have to believe is that we keep doing what we're doing with this customer segment. You don't have to believe something totally discontinuous. You have to say, hey, we're already doing it. Instead of the future is going to be so different. It's, let me show you what we're already doing, and you can just project that if we keep doing that, you're going to see results.
Exactly. Because the steps they have to take to believe is not very far. They actually, what I got from VCs is, cool, so if we give you this money, are you just going to go after this customer? I'm like, yeah. Why would I go after the other? I'm actually trying to churn some of those customers because it's a different product.
Yeah, one segment of my customer base is my strategic segment. That's the one we focus on. The other one, it's great to have those folks along. They spread awareness, but that's not the business engine. So let's not get distracted. We know who our core customer is.
Exactly.
I think it was Chip Heath who wrote Made to Stick, talks about shrinking the bet. And that when you want someone to make a bet, you don't want to make it seem like this big, unloaded, unpredictable thing. You want to make
I
it
like
seem
that.
like something that's a small bet that is already de-risked. And it sounds like, well, what's your overall approach to including data? Do you use data in ways kind of very specifically like that when you pitch?
Definitely. I would say from a data perspective, when I was pitching, I knew the data cold. I would prepare with my CFO and we would go through every possible question that I could get asked. And I knew all of it pretty much cold by heart. And then what I started doing is when we got much bigger and like there was just a lot more data, I actually would print out the KPIs and put them in my notebook, which I always take my notebook around everywhere. And I would put it in the notebook so that at least I had it in case they asked, and I knew, of course, the top 20 KPIs, but, some of this stuff I didn't know off the top of my head. But yes, I think using the data in two ways. One, to show them that I knew it and that I gave a shit about the data because I think that's what they want to see. And two is to show them the trend lines, what you just said, you're not having to make a huge bet. Actually, our conversion rate from opportunity open to opportunity close has been improving 6 quarters in a row. Is it going to improve 2x next quarter? No, but you have to at least trust me that I've been doing that for the last 6 quarters and it's going to continue. You have to believe me that our net retention, which was, 117 and is on its way to 125 because I went 117, 119, 120, and I may go back down, but I know the levers to pull to get there.
Yeah. And you do that with a ton of credibility and you really show that stepwise. Look, we've got this. All we need is to keep doing these things. We know exactly what to look for. I see a lot of entrepreneurs who undersell their traction. They don't realize with that investor perspective what's persuasive. And so it's interesting because there's a lot of times there's a huge opportunity. Let me ask you something. Have you ever had a pitch go so badly that it became memorable where you learned something from it?
Oh yeah, I had a lot of those. One of the first pitches I did for BetterCloud, I think it was Series A. I went to Sand Hill Road, which I swear, when someone described Sand Hill Road to me, I thought I was going to arrive there and it was going to be like paved in gold. I remember thinking in my brain, like, this place must be the nicest place like in the world. And I arrived and I looked like the apartment complex where I like lived in Atlanta. Like, you go, wow, okay, this is Sand Hill Road. Anyway, so I went to Sand Hill Road and I went to pitch at Sequoia and it was Doug Leone. And obviously everyone knows, or I didn't know at the time, frankly, who he was. I had no idea. And then I called someone from my team. And I was like, oh yeah, I'm going in to meet Doug Leone. And they said, Doug Leone, he is like the legend. I literally was rushing to get to this meeting. I go in and I think I was in the room with him one-on-one for who knows, because some of this is like me. I was so nervous. And I think I was in the room for like 9 minutes. I'm pretty sure like less than 10 minutes. He didn't even give me the chance to sit down. I pitched standing up. And after 9 minutes, he said to me, this is not going to be a big company. And I am not interested. And at the time, I was first really scared and also really offended when I walked out. When I think about where I now am in my career, when I think about when I make investments, when I think about the things that I've learned from other VCs that I've talked to, when I think about how bad my pitch was, he was so right to do that. Probably one of the reasons he's a very good investor is because he didn't waste his time with people that pitch like that and that couldn't tell the fund maker story.
What did you do with that? What did you do to make change?
That was where the beginning of my better storytelling started happening. And when I then talked to like the principal, I can't remember again what title he was, but I talked to the junior person who had set me up with the meeting. And he said, Dave, look, it's great. I mean, you probably built a business doing even 100 million, but that's not what we're looking for. And it was that thing where when you're in it as a founder, I was at 0. Me getting to 50 or 100, I'd be so happy. But when he said that, it was the beginning of me realizing the story has to be so much bigger, because that's not what they're looking for. So yeah, I remember that moment, and I definitely got a lot better from there.
That changed how you pitched the story. Did it change anything about how you actually set the strategy for the business?
It didn't at that moment in time, not at that moment in time. But as we got bigger and we got to about 10 million of ARR approximately, I started to see a ceiling kind of approaching of probably 12 or 15 million of ARR, something like that. And I had that realization at that point that I'm going to have to make a really big bet and a big kind of swing, if you will. And we made a massive, we evolved the product and the platform. We basically rewrote the entire thing from scratch to be able to go after this bigger vision that we had of SaaS management versus just Google management. It was a really big bet. I mean, it was a definitely burn the boats kind of bet. And I do think it was tied to that. And I remember a similar moment in time at Vocalocity when I was much younger and much earlier in my career. And we had that same opportunity and the same moment. And the same thing where if we press the big red button and redo this, there is this huge opportunity staring in front of us. And I don't know if it's the case, but that company, instead of being tens of millions, would have been RingCentral. We were ahead of RingCentral at that time and didn't make that same decision. So to answer your question, yes, I do think that, not just that, the other 100 no's that I got and feedback that I got, I do think made me realize at that moment where I saw some ceiling, made me realize we're going to have to do something big and think big and take a different approach to the strategy of the business if we want to have the big upside. So we go through a basically 2-year rebuild of our platform in order to go after that bigger fund maker vision. We spent $25 million, something like that, and we come out to the market. And by the way, just like this, I was really excited. I was like, this is it. This is the thing. This is going to change the company. We've been waiting 2 years. And I get out to the investors, and the investors are like, Dave, that's great that you have the product, but you have 2 customers on it. There's not critical mass. I said, yeah, but we just spent 2 years rebuilding. It's like this massive thing, and it's going to change the world. And they say, yeah, cool, but I need to see traction. And so I started asking investors, what does traction mean? By the way, another very important lesson in my journey and for founders, I was scared to ask investors questions the other way, like that directly. And they would say, we want more traction. And in the past, I would have walked out the door and been like, they need more traction. Now I said, what does traction mean?
Yep.
And people gave me different answers, 50, 200, 500, whatever. But everything kind of clustered around 100. So then I started having meetings with investors. And I said, just to be clear, you need to see traction, I'm sure. How much? And they're like, I don't really know. I said, well, all the other investors said 100. And they're like, yeah, 100 sounds good. I'm like, okay. So I went back to my team and we had a meeting, and I said to the entire company, the only thing that matters is we get 100 customers on this new platform. It's going to prove traction. It's going to prove the value of the platform. It's going to prove that we know how to sell it. It's going to prove we know how to market it. And then for a period of 9 months, all of our screens in our office, and this is back when everyone was in office every day, was just a ticker or a count to 100. And it was just 1 out of 100, 2 out of 100, whatever. And everything we did as a company was tied to trying to achieve that goal of 100. So when I did that, my sales team came to me and said, Dave, we can't sell it because the pricing, it's like calculus to come up with the pricing. I said, cool. Next day, literally next day, we changed the pricing, simplified it. And they were like, great, it worked. Then they came back, Dave, we don't know how to market this. We don't know how to message this. I said, okay. That weekend, actually spent 2 days, and I wrote an entire book on managing your SaaS applications, like a whole book. My wife actually took the kids. They went to my in-laws, and I just sat at home for 2 days, and I wrote all the things and then gave it to the marketing team. They learned it. We pitched like that. Then we had all these customers. They said, I'd buy, but you don't have these 12 features. We just made the 12 features on a Kanban board, gave it to the engineering team, and said, just you're going to work your way down those things. Anyway, long story. I could go on forever. But at the end, we got to 119 or 112 or something like that. And I told the team, thank you. You did what you needed to do. Now I'm going to go do what I need to do. And I went out and, we had multiple term sheets and we closed the round in 3 months.
Amazing. One thing you really did was just eliminate excuses and eliminate latency in that turnaround, right? You treated it like a war room. There's a company I was involved in, a biotech company, where the team would need time to make decisions. And the CEO said, I'm going to make all decisions within 24 hours. And they compressed, months and months out of the process to say, like, we're not going to let them sit. And you're doing the same thing.
Oh, yeah, yeah. Well, I knew. I mean, I knew that if we had not solved that, like, we were going to have a real problem. Like, if I just had the worst 2 years of my career waiting for this rebuild to come out, like, okay, I bet the whole company on this. Like, I have to have the urgency to drive this change.
Yeah. Well, and that's a big change. If you spent 2 years in R&D under the assumption that would be fundable, and then you go out and market test it, and you find out that the VCs say, actually, that's not fundable yet, right? You're not rejecting that feedback and blaming them. Instead, you're saying, okay, let me take it seriously. You didn't just listen to one, you went and triangulated. And then what I'm most interested by that idea that you said, instead of just accepting what they say, I'm going to ask questions and I'm going to go ahead and get clarity. And boy, that sounds like that really helped your triangulation to figure out what to do. How do you convince entrepreneurs to flip the dynamic and say, like, I'm here to be a buyer, I'm here to ask questions, I'm here to do discovery on you, instead of just kind of humbly saying, oh, thank you for your time?
Exactly that last part, like, that's how I was doing it every time. Thank you so much. It would be my dream to work with you, blah, blah, and never really challenging back. And what I tell founders, I say, the reason you want to ask the questions back is because if you don't know where to improve. For example, someone will say, yeah, what we really would want to see is, your leadership team kind of filled out, because for us, if you're going to get to 100 million, you're going to have to level up your team. And I'm like, okay, you mean like the entire team, C-level in every single seat? Is there a specific one that you think is a higher priority? And what I find is that not all the time, but many times, the investors actually don't have the answer. And I think that once they feel that pushback is coming, it levels the playing field more in the conversation. And so anyway, my point is, you start to ask questions back, you start to challenge back. When they say, oh, we do all of these things, our value add to you, the reason you want to work with us, we do these 900 things. Cool. Do you have examples of all 900 things that you've done for different companies? No, not all. Actually, what we're really good at is this. I'm like, okay, cool. That's good. Like, that's actually useful to me. But that challenging back and forth is very uncomfortable in the beginning, very uncomfortable. But that's how I try to explain it to founders.
What changed for you to go from uncomfortable to no problem?
Realizing that if I didn't ask the question, I was just operating blindly on the other side, and it sucks because this is the thing. If you are fundraising, which the unfortunate truth is that you need to do that for a lot of the companies we want to build. They take capital. And so if you're going to do that, then you have to play the game. If you have to play the game, that means you need to know what it's going to take to fundraise the next round. If you're going to need to know that, you better ask the question so someone actually gives you a straight answer versus trying to figure it out along the way on your own.
Yeah, and for entrepreneurs who feel like that might make them seem too ballsy or aggressive, do you think VCs actually have some respect for it? What's the reception you get to those kinds of questions?
I think it's kind of how you ask the question, right? If you ask it in the right way, look, I'm stupid. I'm a first-time founder. I've never done this before. I'm curious from you because you know everything. You're the VC who's invested in all the best companies. I'm curious from your perspective, what does traction mean? Because I don't know. I don't really know. I'm exaggerating, of course, the approach, but not so much, by the way. And so when you go down that path, I think that investors are like, oh, okay. They're not being ballsy. They're really trying to understand. If you say, oh, no, you need more traction, and my response is, that's bullshit. Tell me what traction really means. I mean, that probably isn't going to go well,
Oh, yeah. So let's talk a little more about what investors are looking for when they meet a founder. I'd love your thoughts.
Well, I think the number one thing I have learned, and I've heard this from my interviews with VCs, my VC connections, every VC that I talk to, I still to this day, I ask them, how long between meeting a founder for the first time and making a decision that you want to invest? Not actually investing, but making the decision in the back of your mind. And the answer that I've gotten is somewhere between 15 minutes and 30 minutes. So first meeting, within the first 15 minutes, an investor is deciding in the back of their head, do they want to invest? That's a very short period of time. And then from that point, I'm going to do my diligence and everything, which makes sense. So you have that first 15 minutes. And in the first 15 minutes, what I believe and what I've heard from them that they are looking for is really three big things. Big thing number one is that there are market dynamics, tailwinds that are coming, actually, aren't even here yet, that are going to put you in an environment where you can build a fund maker type of company, a public company, a 30-year-old company, a generational company. So they want to understand that there's some tailwinds coming in this market. The other thing they want to understand is you specifically as a founder have the investors said it as earned secret, something about this space that you know better than anyone else, that you have this special leg up because of that. Maybe you experienced it, maybe you did something in the space before, whatever. And then the third one is this person someone who's not going to quit, someone who's got the grit, and someone who wants to swing for the fences and wants to build a massive company? And in the first 15 minutes, I believe they're trying to very quickly assess, do the market dynamics exist for this to be a huge company? Does this person want to build a huge company? Do they have the ability to do that? Do they have some knowledge about this space that's going to allow them to do that better than anyone else? That's what I think they're looking for.
Even in your self-intro that we did of how you'd introduced yourself to a VC, you're showing that grit that you're talking about, that perseverance. And the first thing you said, which is, let me tell you about my first company. Let me tell you about my childhood growing up, learning to be an entrepreneur and business person and by shadowing my dad. You're talking about that grit and you're demonstrating we let go of pretty much everybody in the company and I stuck it out. Like, that's a pretty incredible way to make an impression. And you do that from the very beginning.
That's why I tell the story that way, actually, is because of that. And if there's only kind of one thing founders get out of this conversation, I find that many founders go into their first meetings and they put up the deck and they just start talking about the company. And then somewhere in the deck, there's a team slide. That's what I notice. And I tell founders, you can put the deck up, but start with that story, the way you just asked me to intro myself, start with that. Nail that story, because most founders have something in their background. Like, they have that journey. They just have to tell the story the right way. So anyway, I think telling the story in the beginning is so important, but being really deliberate about the story, not just winging it.
Beyond your own experience, you've also been interviewing a whole lot of other people in the ecosystem. Can you talk a little bit about your podcast?
Yeah. So I started this podcast about 2 years ago called Not Another CEO Podcast. I've interviewed almost 100 CEOs now, one every Tuesday for the last 2 years. And, I try to tell the real stories of building companies, the tactics, the strategies, the ups, the downs. Actually, that's why I really was excited to do this with you, is like, this is not theoretical. It's not celebrating this valuation. This is like really, I think this is what is generally missing. If you listen to a lot of startup podcasts, this founder made it worth 50 trillion and this person made all that and this, but it's all kind of revisionist history and a lot of like just celebrating not the real life of kind of an entrepreneur founder. I will say that what I have learned is how hard fundraising was for some of the best companies ever. And I think that that's something really important for people to know and hear, because when you're going through it and you see this company and they did this and blah, you don't know that that guy pitched 87 VCs before getting a yes. You don't know that the second round he pitched 94 before getting a yes. You don't see that. You only see the outcome. And when you're in it, it can be very depressing to go through this, and think that you're the one, you suck. And so I kind of like those stories, as painful as they are, because I think it's important for people to hear that from people.
Somebody published the stat that in Uber's Series A, they pitched 165 investors and 150 of them said no.
Whoa.
Right? Uber's a $150 billion company today, and a company that's been, a wild zigzag in a million different ways.
Wow. I didn't know that.
Yeah. And I think it's very humbling, because I can't think of a successful CEO who hasn't had some disastrous investor meetings. And more often, a disastrous round that was just like by the skin of their teeth.
Yeah,
And that's the journey to success, right?
exactly. Exactly. And you don't see it because no one's going to go public. No one's publishing on LinkedIn. I almost didn't close the round. I got 900. Like, who's going to publish that? Nobody. So, like, you don't hear those stories.
Right. Out of all this, do you have a couple of kind of golden rules or a couple of principles that rise above everything that you pass on that you think make a difference for folks?
I think the biggest ones are one, you have 15 minutes to make an impression. And so nail that first 15 minutes and make sure you're great at telling your story and the very beginning part of the company's story. So that's the first. The second one to me is what we talked about before, which is you want to make sure that that when you are meeting with investors, you are under promising and over delivering, which sounds counterintuitive, but that you're doing those so that you can build the respect and the track record with those investors. I think that is a really big one. And the third one is, as much as you can, don't ever be in a true fundraise mode, and try to be, as much as you can, be talking, building relationships, understanding their take on the market, on your company, doing all of that, because it will make the fundraise when it does happen much easier.
Mark's sister used the expression investors invest in lines, not dots. Like the time series built relationship is so valuable, and having multiple engagement points for people to get to know you builds trust so well. It is a real advantage to people when they can do that. I'm just really thrilled to compare notes with you. You've been through so many rounds and you've been involved in so many other entrepreneurs' fundraisers too. It's really great. You've got such a font of wisdom. So thank you so much, David.
Thank you. I love this. Thank you.
Wow, that was super fun. David has tremendous energy, and it is such a big asset for entrepreneurs to bring that kind of energy that can carry an entire discussion and just be so enthusiastic and get people on board. Couple of things that I absolutely loved from our conversation. The first, the idea of asking questions, even really specific questions like, what exactly is traction to you? That is so important to actually get the feedback you need in order to make the pitch and the business better. You've got to overcome that urge of the default to kind of be polite and just say thank you, and instead press for really specific feedback so that you can triangulate like David did and actually make the business not only fundable, but also on a better path. Number two, the way he then incorporates that into his storytelling. For David, listening first to what matters to the investor is the basis for that storytelling, that it's not about what story you can spin, it's instead about understanding what they're looking for. That is totally a learned skill. And he talks about going from zero to hero at it. You know, these are things that aren't born talents, but I love hearing stories of other entrepreneurs because it shines the way for all of us to do that. Guys, I hope you enjoyed this episode as much as I did. If you did, please consider following us on Substack, rating and reviewing this on Spotify or Apple Podcasts. And we'll look forward to seeing you next time on Razor's Edge.